Here we can see a chart which shows several types of banks. Central bank, commercial bank, co-operative bank, development bank, exchange bank, regional rural bank, savings bank, investment bank, specialized bank. Let us study all these banks one by one. The first one, Central Bank. It is the apex financial institution of banking industry. Every country has its own central bank. Example, Reserve Bank of India, which is also known as RBI in India. The RBI was established in 1945 under the Reserve Bank of India Act 1944. Functions of RBI are framing monetary policy, second, issuing currency notes, third, acting as a banker to the government, and the last one, acting as a banker's bank to commercial and other banks in India. The second one, commercial bank. The banks with which individuals and business organizations transact are called commercial banks. These banks perform various primary functions, that is, accepting of deposits and lending money, as well as secondary functions, that is, agency and utility functions. They play vital role in countries' economic and social development. Three groups in India, commercial banks, are divided into three groups. The first one, public sector banks. The second one, private sector banks. And the third one, foreign banks. Let us see the first one, public sector banks. Here, majority of capital is held by government. Example, Bank of India, State Bank of India, etc. The second one, private sector banks. These are owned by group of individuals. Example, Axis Bank, HDFC Bank, etc. And the third one, foreign banks. These are established outside India but have branches in India. Example, Citibank, Standard Chartered, etc. RBI has designed SBI, HDFC Bank and ICICI Bank as SIBs, and SIBs is also referred as domestic systematically important bank. These are those banks which are big in size and have the potential to disrupt the financial stability in case they fail. Therefore, every country was asked to identify such banks and put them under tight supervision. However, RBI has also identified these three banks as too big to fail. The third type of bank, Co-operative Bank. These banks provide credit mainly to economically backward people, farmers, and small-scale units. Hence, they are popular in semi-urban and rural areas. In India, cooperative banks are registered under Indian Cooperative Societies Act and regulated under Banking Regulation Act. 3 levels. The first one, primary credit societies at village level. They collect deposits from members and common public. They also get funds from the state cooperative bank and district cooperative banks for the purpose of lending. The second one, district central cooperative bank at district level. They collect deposits from the public at the district level and also get funds from the state cooperative bank for the purpose of lending. The third one, state cooperative bank at state level. They provide funds to central cooperative bank and primary credit societies as required. State cooperative bank also performs functions of monitoring over district bank and credit cooperative societies. The next type of bank, industrial development banks. These are financial institutions that provide medium and long-term funds to business firms. Example, Industrial Finance Corporation of India, that is IFCI, State Finance Corporation, that is SFC, Maharashtra State Finance Corporation, that is MSFC. The functions of industrial development banks are: first, providing medium and long-term funds for expansion and modernization. Second, underwriting of shares issued by public limited companies. And third, purchase of debentures and bonds. One of the functions of industrial development banks is to underwrite shares issued by the public limited company. Underwriting means guarantee to buy the shares that remain unsold when shares are issued to public by a company. The next type of bank, exchange banks. These banks, as well as large commercial banks, facilitate foreign exchange transactions. Example, Barclays Bank, HSBC Bank, etc. The functions of exchange banks are financing foreign trade transactions, issuing letter of credit, discounting of bills of exchange, and remittances of dividend, interest, and profits. A letter of credit or credit letter is a letter from a bank guaranteeing that a buyer's payment to a seller will be received on time and for the correct amount. In the event that the buyer is unable to make a payment, the bank will be required to pay the remaining amount. The sixth type of bank, regional rural bank, that is RRBs. RRBs are sponsored by large public sector banks. These banks were established in 1975. The functions of these banks are mobilize and collect deposits mainly from rural and semi-urban areas, provide loans and advances to small and marginal farmers, agricultural laborers, and rural artisans. The capital contribution is 50% from the central government, 35% from the sponsored banks, that is commercial banks, and 15% by the state government of that particular state. The seventh type of bank, savings bank. The main objective of savings bank is to encourage savings of people, especially in rural areas. Examples of such banks include Postal Saving Bank, commercial banks, and co-operative banks. The eighth type of bank, investment bank. Investment banks do not directly deal with general public. Their clients generally include business firms and government organizations. The functions of investment bank are provide financial and advisory assistance, providing advice on investment decisions, and facilitate mergers and acquisitions by undertaking research. The last type of bank, ninth one, specialized banks. These banks provide overall support for setting up business in specific areas. Examples, the first one, Export and Import Bank, that is EXIM, Small Industries Development Bank of India, that is SIDBI, and the third one, National Bank for Agriculture and Rural Development, that is NABARD. The first one, Export and Import Bank, that is EXIM. It provides financial assistance to exporters and importers. It functions as the principal financial institution for coordinating the working of institutions engaged in financing export and import transactions. It aims to promote international trade. The second example, Small Industries Development Bank of India, that is SIDBI. It was set up on 2nd April 1990 under an Act of Indian Parliament. SIDBI acts as the principal financial institution for promotion, financing, and development of the micro, small, and medium enterprise sector. It also coordinates the functions of institutions engaged in similar activities. The third example, National Bank for Agriculture and Rural Development, that is NABARD. It is an apex institution for financing agricultural and rural sector. NABARD provides short-term and long-term credit through regional rural banks. It provides finance to financial institutions and not individuals. NABARD also engages in policy planning and operations relating to agricultural and rural credit. These were the examples of specialized banks. Now let us see the next new models of banking. According to Indian Banking Regulation Act 1949, banking refers to accepting for the purpose of lending or investment of deposits of money from public repayable on demand or otherwise and withdrawable by check, draft and order or otherwise. The new models of banking are as follows. The first one, small finance banks. The aim of these banks is to provide financial inclusion to sections of the society which are not being served by other banks. In India, small finance banks are a type of nice banks. They have small finance bank license and provide basic banking services of accepting deposits and lending. The aim of these banks is to provide financial inclusion to sections of the society which are not being served by other banks. Let us see the objectives of these small finance banks. First, providing an institutional mechanism for promotion of savings for unserved and underserved sections of population. Second, supply of credit to small business units, small and marginal farmers, micro and small industries and other unorganized sector. Example, Jana Small Finance Bank, AU Small Finance Bank, Equitas Small Finance Bank, etc. Let us see the eligibility of these small finance banks. These banks can be promoted either by individuals, corporate, trust or societies. Existing non-banking financial companies, that is NBFC, microfinance institutions, that is MFI, and local area banks, that is LAB, can apply to become small finance banks. Small finance banks can be promoted either by individuals, corporate, trust or societies. Now we come to the establishment and regulation of small finance banks. They are established as public limited companies in the private sector under the Companies Act 1956. They are governed by the provisions of Reserve Bank of India Act 1934, Banking Regulation Act 1949. There is no territorial restriction for these banks. The second model of banking, that is Payment bank. Payment banks aim at to provide financial services to small businesses and low-income people. Payment bank is conceptualized by the RBI. Comparison with other banks. It can perform most of the banking functions such as mobile banking, ATM cards, net banking, etc. However, it is not allowed to issue loans and credit cards. Similarly, it can accept the demand deposits only up to rupees 1 lakh. Example: Indian Post Payment Bank, Airtel Payment Bank, Payment Bank, etc. Hope you all have understood the different types of banks.